Welcome to today's Bond ETF Showdown. We're comparing four funds with wildly different results over the past 5 years. One gained an impressive 22%, while another lost 24%. If you're investing in bonds for income or stability, you absolutely need to understand what separates winners from losers in today's market. Let's start with the size of these players because it's pretty interesting. TLH leads the pack with over $12 billion in assets, followed closely by Sub at $10 billion. TOTL manages $4 billion, while FLTR holds about $2.5 billion. But here's what matters most. Size doesn't tell you anything about performance. Quick legal note before we dive deeper into the data. Everything here is educational only, not financial advice. We're using data from EODHD and FRED as of December 2nd, 2025. Past performance never guarantees future results. You're responsible for your own investment decisions, so please do your research and consult professionals before investing. Now, let's talk about long-term performance, where things get really interesting. FLTR absolutely crushes the competition with a 5-year annualized return of 22.34%. Sub delivered 6.58%, TOTL managed 2.64%, and TLH sits at the bottom with a negative 24.37% loss. The 3-year picture tells a remarkably similar story. FLTR maintained its dominance with 21.77% annualized returns. TOTL posted 15.93%, Sub delivered 8.55%, and TLH lagged significantly at just 2.83%. Consistency matters when you're planning for retirement. But here's where things get interesting for 2025. Through December 2nd, TOTL leads with 7.46% year-to-date, followed by TLH at 6.98%. FLTR returned 4.72%, while Sub trails at 3.13%. The performance spread has narrowed considerably this year. Let's talk about volatility because this is where you really see the cost of those returns. FLTR's stellar performance came with just 0.69% volatility over 90 days. TLH's struggles paired with 7.29% volatility, the highest of the group. TOTL registered 3.1% and Sub showed 1.07%. Maximum drawdown separates the survivors from the casualties in any market downturn. TLH suffered a brutal 41.14% maximum drawdown over 1 year. FLTR experienced 17.84%. TOTL saw 16.48%, and Sub had the shallowest at just 9.46%. Here's the key to understanding these performance differences: duration. TLH carries an effective duration of 12.06, making it incredibly sensitive to rate changes. FLTR has a negative duration of minus 0.09, providing rate protection. TOTL sits at 5.56 and Sub at 1.88. Recovery time matters enormously if you're living off your portfolio. Sub recovered from drawdowns in just 61 days. FLTR took 162 days. TOTL needed a painful 1,026 days to bounce back, while TLH's recovery data isn't even available, suggesting it's still struggling to recover from losses. Let's look at risk-adjusted returns using the Sharpe ratio. FLTR's 3-year Sharpe ratio of 1.21 indicates strong risk-adjusted performance. Sub posted negative 0.62, TOTL delivered 0.23, and TLH struggled at negative 0.17. FLTR generated the most return per unit of risk taken. Income generation varies dramatically across these four funds. FLTR offers the highest dividend yield at 5.06%, followed by TOTL at 5.2%. TLH provides 4.09%, while Sub trails at just 2.36%. All four distribute monthly, which is convenient for income investors. Dividend growth shows you the income trajectory over time. FLTR's 3-year dividend growth of 62.73% leads the pack. Sub posted 56.83% growth, and TLH showed 19.1%. TOTL lagged with just 6.06% dividend growth over the 3-year period. Expense ratios stay pretty competitive across the board. Sub has the lowest at 0.07%. FLTR charges 0.14%, TLH costs 0.15%, and TOTL comes in at 0.55%, nearly 4 times higher than sub. Those costs add up significantly over decades of investing. Here's a consistency metric that really matters: positive months. FLTR posted positive returns in 74.43% of months. Sub was positive 64.39% of the time, TOTL in 60% of months, and TLH in just 52.86%. More frequent gains reduce emotional stress considerably. The Kalmar ratio highlights return per unit of maximum drawdown. FLTR's Kalmar ratio of 6.88 dominates, showing excellent returns relative to maximum drawdown. Sub posted 2.23, TOTL managed 0.87, and TLH delivered just 0.14. FLTR rewarded risk takers handsomely over this period. So what have we learned so far from all this data? FLTR has dominated on total returns, risk-adjusted performance, and income growth while maintaining remarkably low volatility. TLH's long duration created devastating losses during rate increases. Sub offered stability with quick recoveries. TOTL delivered moderate results at a significantly higher cost than competitors. Rising rate performance really separates survivors from casualties. When rates climbed, FLTR posted 0.38% returns, while the others declined significantly. TLH lost 0.99%, TOTL dropped 0.87%, and sub fell 0.34%. That negative duration provided critical protection for FLTR. Falling rate performance shows TLH's potential upside in different environments. TLH delivered 25,035.97% during falling rate periods, though this extreme figure suggests possible data capture issues. TOTL gained 8.15%, sub rose 0.95%, and FLTR added just 0.03%. Beta shows equity market independence across all 4 funds. TLH and FLTR both have 3-year betas of 0.06 and 0.05 respectively versus the S&P 500. TOTL registered 0.02 and sub showed 0.004, providing true diversification benefits away from stocks. Alpha generation reveals actual manager skill beyond market movements. FLTR generated 5.56% alpha over 3 years, the highest of the group. TOTL added 4.72%, sub delivered 2.68%, and TLH contributed 0.57%. Active management created measurable value here. Concentration levels differ dramatically across these 4 approaches. TLH's top holding represents 20.1%, with the second at 17.1%, showing high concentration. TOTL's top holding is 2.11%, with moderate diversification. FLTR's top holding is 2.01%, while subs is just 0.35%. Yield to maturity sets your future income expectations going forward. FLTR offers 4.87% yield to maturity, followed by TOTL at 4.86%. TLH provides 4.57%, while sub trails at 2.59%. These current yields give you a sense of future income potential. Maturity profiles explain rate sensitivity differences perfectly. TLH's effective maturity of 16.88 years creates maximum rate risk exposure. TOTL sits at 5.09 years, FLTR at 3.05 years, and sub at just 2.35 years. Shorter maturities clearly protected against rate volatility during this period. Downside capture shows bear market protection when things get ugly. Sub captured just 0.01% of downside moves, providing excellent protection. FLTR captured 4.68%, TOTL caught 17.06%, and TLH had negative 11.59% downside capture. Lower numbers mean better preservation. Best and worst years reveal the full range of outcomes. TLH swung from a best year of 21.65% to a worst year of negative 25.24%. FLTR ranged from 8.63% to negative 7.1%. Sub ranged from 4.22% to negative 2.05%. Value at risk quantifies extreme loss probability and tail events. SUB's 99% value at risk of negative 0.39% suggests minimal extreme loss risk. FLTR shows negative 0.57%, TOTL indicates negative 0.76%, and TLH projects negative 1.73%. Lower VAR means safer sleep. Maximum consecutive losses test investor patience and discipline. SUB experienced 11 consecutive losing months at its worst stretch. TLH and TOTL both saw 8 straight down months. FLTR had 7 consecutive losses. These losing streaks really test whether investors can stick with their strategy through difficult periods without panicking out. The Sortino ratio focuses specifically on downside risk instead of total volatility. FLTR's 3-year Sortino ratio of 0.69 leads the group. TOTL posted 0.36, while TLH showed negative 0.27, and SUB delivered negative 0.77. FLTR provided the best downside-adjusted returns by this measure. Treasury correlation reveals diversification benefits across different fixed income approaches. TLH shows negative 0.76 correlation with 10-year treasuries, moving opposite to traditional bonds. TOTL correlates at negative 0.53, while FLTR shows 0.12 and SUB indicates negative 0.11. Very different exposure approaches. Risk scores rank overall capital preservation ability across multiple metrics. SUB leads with a risk score of 1.04, indicating superior capital preservation characteristics. FLTR scored 0.67 and TOTL earned 0.62. TLH's negative 0.72 risk score reflects its significant volatility challenges during rising rates. Income scores highlight overall yield quality combining current income and growth. FLTR dominates with an income score of 1.05. SUB follows at 0.86, TLH posts 0.06, and TOTL shows negative 0.2. FLTR combines high current yield with strong dividend growth over time. So who's the winner? Well, it depends on your priority. For total returns and income growth, FLTR wins decisively with 22.34% 5-year returns. For capital preservation and quick recovery, SUB takes the crown with minimal drawdowns. For rate cut scenarios, TLH suits investors betting on sustained cuts. TOTL offers middle ground at premium pricing. The retiree's choice becomes pretty clear when you look at the full picture. FLTR delivered 22.34% annualized returns with just 0.69% volatility and 5.06% income yield with strong dividend growth. SUB offers stability with 61-day recovery, negative 0.39% value at risk, and minimal extreme loss risk. Thanks for watching this deep dive into bond ETF performance. If you want more head-to-head fixed income comparisons with data-driven analysis that cuts through the marketing noise, hit that subscribe button. I'll see you in the next video where we break down more investment options to help you make smarter decisions with your money.